Yeah, get started.
Okay, so my name is Janna Fox. I have been with Credit Law Center going on my 6th year. Before that, I sold real estate off and on for about 10 years, so I understand what it's like to want to become a homeowner and get all excited about that, and then go through and talk to a loan officer and be like, perfect, I don't get to do anything with that until I fix my credit. So one of the things that we specialize in is getting consumers ready to become homeowners by correcting their credit, or even just giving them advice. Sometimes people have low FICO scores just simply because they don't have enough credit established. So we can actually help do that as well. So I left a couple things for you. This here, this trifold, this is pretty basic information, basically going over the difference in what a consumer could do on their own to repair their credit versus a credit repair company, which ironically most consumers can do more than what a credit repair company can to correct their credit, and then what a law firm can. And Credit Law Center is a 100% law firm, and we specialize in debtors' rights. So that's the reason why we are as powerful as we are. And then on the back, it'll just show you the percentages of how the actual FICO score comes about. So what percentages, and we'll go through that more in the presentation just a little bit, but this is really good information to have and to keep, and so feel free to use that, or if you want more, let us know, we can give you a few more. And then this flyer here is, put this on your refrigerator or anywhere you'll see it. This is the do's and don'ts of home buying. I'm gonna tell you right now, even if you've bought a house before, it is very tempting to do things like go to Nebraska Furniture Mart, apply for a credit card to get furniture for your new house you just put an offer on, and then all of a sudden you're not approved. So make sure you know this inside and out. This will keep you from rookie mistakes or just getting emotional and excited to purchase things. I just purchased my 3rd house 3 years ago, and I know what I'm doing, and I almost fell for the furniture thing. So can't do it. All right, it's because you get excited and you're like, and they get like, same as cash for 60 days, whatever. So just know this information inside and out. All right, so we're just going to go ahead and start with the 5 top credit myths, and this is just normal misconceptions out in the marketplace. Real estate agents, loan officers, and consumers, just different misconceptions that they have. So the first one, myth number 5, is you only have one credit score. So if you guys have taken the time to look online, if you're curious what your FICO scores are, your credit scores, and you go on, let's say, Free Credit Hub, or you guys probably don't know that one. What's the other one? The Gmail one. Free Credit
Karma.
Yeah, okay. So that is not your FICO scores whatsoever. Those are called consumer scores. So different lenders may use different versions or weights in your FICO score. And currently there are 43 different versions of FICO. All right, so just FICO itself, there's 43 different versions. And actually this slide show was made about 1.5 years ago, and there's more than there was when we made this. So there's that. So when you go in to get a loan or apply for a loan to get a car, they're going to be using a different version than what someone that is pulling for a home loan is. They're going to be using version 9. Anytime you go for a credit card, apply for that, they're normally using version 9. And when you go in for a home loan, the loan officers and mortgage guys are going to be using version 4. Version 4, FICO version 4, is going to weigh things more heavily than what version 9 does. So medical is weighed heavily, balances on credit cards are weighed more heavily. So your score is normally lower when you go in to apply for a home loan. It's because of the version that they're using, the FICO version. That's probably not going to change anytime soon. So just, that's how it's going to be. So as far as the scores that you find online, with just the different consumer scores, those are completely different. They can be up to 100 points off. They start out at the higher points, like 400 is the lowest a lot of times, and it goes up to 1,000. So a lot of times if you're pulling like a 702, you're probably more in the 600 range. All right, so keep that in mind when you're looking that stuff up.
What was the first slide? What did the first slide say? Just
that you only have one credit score.
Okay, cool. Thank you.
And also, when you're going into to a car dealership, they're usually only pulling one bureau. So there's 3 bureaus. They're usually only pulling one. Sometimes they'll pull a second one. When you're going in for a mortgage, they're going to be pulling all 3, and they go with that median score. Okay, so that's how. Does anybody have any questions over that? Clear? Okay. Myth number 4 is keeping your credit card balances at 50% will improve your scores. This isn't correct. You'll hear a lot of people say, well, keep those credit card balances at 50%. So that would be like telling your kid it's okay to get a D on their math test. It's not okay. So I'm not saying you can't ever max out your credit cards, but what I'm saying is, I mean, don't max them out, but I'm not saying you can't utilize your credit cards. A lot of people do that to get as many points as possible, and so on and so forth. What I am saying is about 30 to 60 days before you go in to apply for a loan, get the balance and the limit as far away from each other as possible, all right? So if we did it like a report card, if your balance versus a limit is 0 to 10%, you're basically grading at an A. If it's 10 to 30%, you're basically grading at a B. 30 to 50% is a C. 50 and above is a D, and any late payments in the last 24 months is an F. So what you have to understand is the only thing a FICO score is grading you on how likely you are to default on a loan in the next 24 months. So if you're late on anything, the likelihood of you being late again is very high. So they're going to drop your scores down dramatically, all right? So you want it anytime you're going in for a loan, remember 30 to 60 days beforehand, go ahead and try to get those credit card balances down as low as possible. A few ways to do that is you can get a hold of the credit card company and find out if you can raise your limit and then pay it down, and so then you have a bigger gap.
I was just going to ask, for someone that uses their credit card like a debit card and just pays it off all at once, how does that apply as far as the 10%, 30%?
So what's going to happen is if you pull up that information, so we'll say your credit card balances, you just did that, you pay all your utilities with it, groceries, everything like that, in order to, basically people do that to get as many points as possible on the credit card itself, all right? So when you do that, if they pulled your credit right then, your scores are going to be a little bit lower because you don't have a big enough gap between your balance and the limit. So that's why what you want to do is you want to go ahead for 30 to 60 days before you go to apply for a loan, go ahead and just use cash and don't be messing with that credit card for a little bit.
Cool.
So, and it's okay to have a little bit of a balance on there if you want to. So now if you're someone like me that has had a past with a credit card oopsie, then I have to be really careful. I don't take it with me when I go shopping. I love shoes. I'm out of control with shoes, and I have no self-control when I get in there if I find my size. So I don't take it with me because I know me. So what I have to do is I have to go get a tank of gas once a month, and then I put it back in my wallet, but I'm not joking. I will leave it in my credit card in the car. I'm not over that yet.
Well, and another question, if you have opened multiple credit cards, like when I bought my computer, I got a Best Buy card, would you recommend using that to a percentage? Or I know some people that the Dave Ramsey thing, they freeze their credit cards. What is your recommendation on just the whole, if you have multiple credit cards that you don't use?
That's a great question. So you want to make sure that you're utilizing your credit cards about every 90 days so it doesn't go dormant. The whole thing with your with credit cards, the reason why they're important, it's the easiest way to manipulate your scores in a positive direction. So keep this in mind. The older the credit card, the lower the balance, the better your FICO scores. Okay, so I'm going to say that again. The older your credit card, the lower the balance, the better your FICO scores are. So it's all about history. So that the longer you have a credit card, the better that card is going to give you a higher score. Does that make sense? So it's all about history. So if you have a card that is old, keep it. Just keep utilizing it. Like I said, throw a tank of gas on there. Every once in a while, buy me a belt or a pair of shoes, something like that. But just like about every 90 days, just make sure you're utilizing that card. Okay, does anybody have any questions on that? Clear? Okay. Okay, myth number 3, closing credit cards will help your credit scores. This is not correct. So what happens is when you close out a credit card, you're going to be eliminating quite a bit of your FICO pie. So like I said in here, on the back page here, it goes over this. So payment history is 35% of your score. Amount owed is 30%. Now this little tiny spot here, this new credit is 10%. Anytime you go in and get a new trade line, you apply for a loan, you get approved, your scores are actually going to dip down by about 10%. All right, just for a little bit. It's going to stay down for about 90 days, and it'll start inching its way up. It starts helping after 6 months, and it really helps after 12 months. All right, so it's going to dip down a little bit. The length of credit history is 15% of your FICO score, and then types of credit use is 10%. So you want to make sure that you have a good mix of credit. And what I mean by that is a good rule of thumb is 2 credit cards, that's considered revolving, and then 2 installment loans. An installment loan is going to be like a personal loan, a auto loan, a home loan. You can get like a CD credit builder loan, but that's going to be an installment is a consistent payment every month, and so you pay for like 24 months or 36 months. A revolving is just that. It revolves. Your payments depend on the balance, and it's just continuing all the time. Okay, so you want a good mix of credit. So a good way to think about it is a home loan, a car loan, 2 credit cards. That's your goal. That will get you to a good, thick credit profile. And you want to make sure you're maintaining those trade lines as long as possible.
You mentioned obviously this being a mint. So what if I cut up a credit card that I think I had, when did I have that? Freshman year of college, like 10 years ago. But I just cut it up, but I never closed it. So does that still hurt me because there's no activity? It has been activity on it.
It kind of will go dormant after a while.
So it doesn't count. It doesn't count.
Yeah,
as
it'll stop
old.
bringing you, like, if you're not utilizing, you have to look at trade lines like homework. If you're not turning in your homework to your teacher, she has nothing to grade you off of. If you're not utilizing your trade line, FICO has nothing to grade you off of. So eventually it'll stop helping you. It'll just kind of go dormant for a while, and then
What if I call them and got asked for a new card and start using it again? Will
how
it still
long has it
count?
been dormant?
Yeah, like 7 years or so.
Okay, then that's, once it's dormant for about 6 months to 9 months, then it's just, you would have to get a new account. But I would suggest making sure that you do have credit cards and that you keep them and just use them every so often, because it's all about history. A lot of people do that, by the way. They're like, oh, I never used it, so I just got rid of it. Okay, so myth number 2 is paying a collection will help your credit scores. This is not correct. So unfortunately, just this last couple weeks, I talked to a gal. She's a single mom, really excited, wants to buy a house. She went on Credit Karma, seen what was negative on her credit report, took every single collection item, got a hold of that company, used her tax returns to pay the collections, thinking she was helping. She paid off 7 collections, and her scores tanked by 130 points. Okay, so it's not always the best thing when you have a collection on your credit report to just instantly pay it off, all right? So you've got to do a little bit of homework and figure out the best avenue, all right? And I'm going to explain why. So what happens is paying an old collection will update the last date of activity and the date reported. And if you remember, the history is what's so important. So you can have a $2 collection or a $20,000 collection. The amount doesn't matter. What matters is how long that's been on your credit report. So let's say I have a collection on my credit report, medical bills, something like that, for about 2 years. I go call them today, pay it off. What they do is they update the information. So they say paid collection. It doesn't just say collection anymore. It says paid collection. But now the last date of activity has just changed to today, and now I just plummeted my scores. All right? So when you do that, you have to be very careful. You want to make sure it's actually removed from the credit report, not just updated. All right? So there is less than a 2% difference whether a collection is paid or unpaid. Most weight is given to how recent the activity. So that's the reason why it taints your scores, is because now it has a brand new date. So now it shows up a paid collection for 7 years. So the difference in a paid collection versus a collection is like the difference of having 10 stitches instead of 12.
So, if, like, let's say if I had a dispute with a hospital about a broken nose about 8 years ago, if it's been that long ago and it's a small amount, is it really, based off what you're saying, it's not affecting my score that much? Or
as long as it's not re-aging itself, you need to double check and look at it. A lot of times what happens with collections is it'll be with ABC Collection Company, and about 3 years later they'll sell it to XYZ Collection Company, and they'll do that. So you have to kind of watch it and make sure. All right, so with a collection, if it is coded the way it should be, and we'll get into this in just a moment, then it should eventually stop hurting your scores. All right, so you should be able to heal from a collection. Unfortunately, what happens is a lot of times these collection companies will code them as if they're an installment loan that's past due, and I'll show you what I'm talking about in just a moment. All right, and do you remember what an installment loan is? That's going to be like a home loan, personal loan, exactly. All right, so if it's coded like that, it's going to keep re-aging itself, and it's actually going to continue to hurt your scores.
Yeah.
Okay, so myth number 1, credit reports are accurate. So what would you say, just guessing, the percentage of credit reports that contain errors? Just guessing.
Sorry, what was
Credit reports are accurate. So what would you say, percentage-wise, would you say credit reports contain errors? 30%, 50%?
that? Like 50 to 70%.
Okay. 79%. 79% of all credit reports contain errors.
Really?
That's a huge number.
Yes.
There's no other industry in the world besides for the IRS and the weathermen that could get by with that. Would you have your job if 79% of the time that you had errors? Would you? I wouldn't.
Not.
I wouldn't have my job if 20% of the time I had errors.
Right.
All right. So 79% of all credit reports contain errors. That's why when I talk to loan officers, and they're like, I just never run into anybody with bad credit. I'm like, really? How are you getting 21% of the population? Because I need to tell everybody else how to do that. So 79%. Now, a couple reasons why. The first reason why is the way they even gather information to get your FICO score. It's more like they're fishing with a net instead of a pole. So they're gonna look up your zip code, last name, first initial, 7 out of the 9 social security digits, right? So that's very important that they're getting it just blanket information. So let's say you live in Kansas City, that's a large zip code area, your last name's Smith, your first initial's S, the likelihood of you getting crossover is pretty great. Or if you have situations like in my family, my personal family, my grandfather, father, brother, and nephew all have the same name. My dad and my brother have the same birth date. Their socials are off by 2 digits. So that was a fun night when my dad went to jail for my brother a long time ago, but he was a teenager. Yeah. So that crossover information happens, and then you'll get that medical, old Verizon bills, whatever. It'll cross over on other people's credit reports. So that's one reason why. Oh, you know what? I'm going to skip past this. It's really good information, but it's kind of long. So we'll go over some facts from the CFPB. Now this isn't from Credit Law Center facts, this is from the CFPB. So 31.6 of all credit reports have 1 or more collections on the credit report. 67.5 of all collections result from unpaid bills rather than unpaid loans. Over half are medical. The median unpaid non-medical collection trade line is $366. The median unpaid medical collection is only $207. In a 5% sample of credit reports, approximately 1,400 different credit collection companies were identified. And a recent study revealed that 80% of all medical bills contain errors. And that was from the president of the Medical Billing Advocates of America. So 80% of all medical bills contain errors. I'm not talking about once they get on credit reports. I'm just saying 80% of all medical bills contain errors. All right, and even the way they set it up. So if you go, let's say I go into the emergency room, and they'll kick that out to a collection company within 30 days. My insurance is going to take 90 days to 6 months to pay it. So here you get a collection placed on your credit report, and then the insurance goes and pays it 6 months later, and now I've just got bam bam. All right, so the way it's even set up, consumers are set up to fail. All right, so now I'm going to go over what I'm talking about the misreporting. Now, when I first started working for Credit Law Center, this ticked me off so bad. Like, I was on a crusade to save everybody from the credit bureaus and collection companies. So a lot of times when I go over this, people are like, oh my God, like, I'll show this to loan officers that's been in the business for 15, 20 years, and they didn't realize this. They didn't see it because no one trains anybody on this. They train us though. That's why we're the experts. But anyway, so here we have Millennium Financial, all right? So that is a collection company. See right here. So everything's good so far. And then nothing in the last date of activity. Now keep in mind, credit reports by law have to be timely, accurate, and verifiable. All right? Timely, accurate, verifiable by law. This says collection, but what does it say right above that? Can you guys see that word? Installment. What's an? We talked about that. What's an installment loan? Okay. So what this is telling FICO is that this consumer has an installment loan that is past due by $370. All right? A couple reasons why. This costs Millennium Financial less money to report this way, and it damages the consumer scores more than what a collection would, so they feel like they're more likely to get their money, which they are. Okay? So, installment loan past due by $370. This is actually a collection. Primary financial services. This was originally with ADT. Does ADT loan money all of a sudden? No. No. They're home security. They don't loan money. Nothing in the last date of activity. And what do you see again? What's that word? Installment. All right? And then saying it's past due by $160. So this consumer goes in to try to get a home loan. FICO's saying you already have 2 installment loans that are past due. What do you think their chances are to get a home loan? They already look like they're not paying their installment loans. All right? That is a collection.
And just because I went to this last year, that's an actual report. That's somebody's actual that you guys have pulled.
Yes. These are everything that I show you today. These are actually credit reports. This is not something that we made up. This is what happens all the time. All right. So this is what happens. They know what they're doing. They do it on purpose, and it saves them money, and they're more likely to get their money. Now, here's a sad thing. So let's say this consumer goes in and says, okay, I want to buy this house. I'm going to go ahead and do what's right. I'm going to pay this off So I'm going to pay this $370 off, and I'm going to pay this $160 off. Now what they have is they have a paid collection on their credit report, and now their scores just went down. All right? So this is how a collection should look. You have LHR Incorporated. It's a collection. Collection. You see above that, it doesn't say anything. So an 09, or where it says collection, that is correct. If it has an I-9 or installment above that, that is incorrect. All right? And then it has nothing in the past due. This is the way it should be reported. We have another one here, Midland Funding, open collection, past due, nothing. So this is how it should look. Unfortunately, this is normally not how it looks. So you kind of have to look at it like this. If I go outside and fall down and scrape my knee, it's going to be gushing, it's going to be bloody, it's going to be gross, all right? But it's going to heal. That's this, all right? It's going to heal eventually. When you have it reporting as an installment loan, an I-9, what happens is it's like someone's coming and shoving me down every single month and reopening that wound. It doesn't heal. Okay, so here is something that, this is just, again, credit report. This is a real credit report. We didn't make this up. This particular consumer has 8 collections, all right? Only one of the 8 is reported the way it should be. So here we have, it looks like what it's telling FICO. They have an installment loan past due, $459. Installment loan past due, $375. Installment loan past due, $345. Installment loan past due, $149. Installment loan past due, $100. Installment loan past due, $100. Installment loan past due, $85. Most of these are medical. There's only 2 on here that is not medical. They're at the very top, and they are Comcast Cable and Sprint. All right. There is one collection on here that's reported the way it should be. All right, and this is what we see all day and every day. This is what loan officers see all day, every day. All right, so this consumer looks like they currently have 7 installment loans past due. Do you think they're going to get a loan? No. And then if they went and paid it all off, like paid, it's going to be a paid collection. So it's very important the way they handle those paid collections, or to pay them off. I'll go through these pretty quickly. We have 2 out of 2 misreported. We have 4 out of 4 misreported. 1 out of 3 misreported, not bad. 3 out of 4 misreported. And this is really interesting. So we have Midland Funding right here. This was originally with Bank of America. It's coded as I-9. What does that mean? Installment, right. Then we have Midland Funding, same collection company. It was originally with Direct Merchants. It's coded as what? An 09. That's how it should be reported. So why on earth would the same collection company have one reported as an installment loan and one as it should, as an open collection? Because right here, if you see, info disputed meets FCRA. This was disputed. So they don't go in and say, oh, well, we got caught on one, let's go ahead and fix all of them. They only fix what they got their hand slapped for, okay? So same collection company. So when this happens, and the reason why we are as powerful as we are, so like you said, in the middle of this, it shows you what a credit repair company can do versus a consumer, which is actually more than a credit repair company, and then what a law firm can do. So because we're a law firm, we go in here and we say, hey, guess what, Bub? Guess what you're doing? And guess what you know you're doing? You're coding this as if it's an installment loan past due. By law, credit reports have to be timely, accurate, and verifiable. If they are not, then it's a violation. So because we're a law firm, we can do more than just blow a whistle and say, hey, this isn't fair. We can actually do something about it. And then we have been able to sue all 3 credit bureaus and several other collection companies for doing things like that. And that does go to our clients, our consumers, all right? Because what happens is now you're paying higher interest rates, you're paying higher insurance rates because of the way that they're reporting, all right? And it's not good to get a collection on your credit report, don't get me wrong, but when they're misreporting, it's damaging more than it should, okay? So here's just an example. In October 20th, this particular customer was at a 598, and by December 5th, they were at a 657. All right, so we get people approved and we get them on their way where they can purchase a home. Now here's a couple, oh, I still have my sunglasses on. Okay, so here's some common FDCPA violations. So there's not only violations that are happening on the actual credit report, there's also violations that happen with collection calls. They have very strict guidelines of what they can and cannot do when they're calling to collect an amount of money. So, and if they don't, the fine can be up to $500 to $1,000, all right? So the first type of illegal voicemail is threats or lies. So they can't say, I'm down the street, I'm gonna take you to jail if you don't pay this. That's a threat or a lie. Third-party disclosure, if they are calling a reference that you put down on a loan app and they tell them that they're trying to collect a debt, that's an issue. They cannot do that. But then the third one is failure to leave a mini Miranda. So if they are actually talking to the person that has the collection, they have to state that this is an intent to collect a debt. If they don't, they're in violation, okay? I don't know, do you have sound hooked up?
It should be on. I don't know if it's
It's okay.
up all the way.
This is just examples of some of them, but did you have,
Well, just an example from my own, if you had like on a family member, so the case number 2, where they were calling you asking for blah 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 blah, they didn't leave a voicemail, but they're a collection agency, even if it was student loans, that still applies. That's still not
correct?
okay.
Yes, correct. So, this is really terrible to say, but if you have any deadbeats in your life, go ahead and have them put you down as an app, because you can win like a lot of, no, you win. You can get a lot of money for them calling. We actually had one of our clients, his dad had a truck that kind of went sideways. He wasn't paying for it. And they were calling our client over and over at work, and it wasn't his, it was his dad's. Calling him at work, calling his cell phone over and over and over. Well, I happened to see his phone. I was like, you have a crazy ex-girlfriend or something calling you over and over with that? He's like, no, the stupid company like keeps calling me for my dad. Well, anyway, I was like, oh, buddy, you're going to be so glad you know me. So I got him in contact with our attorneys. He was awarded $28,000. $28,000. Now, that's a pretty extreme case. A lot of times it's like 500 to 1,000. But I'm telling you, like, I know some people I could be like, hey, put me down on your app. Because I know they're not going to pay their bills. And then they might call me. Second job. No, I'm just kidding. Okay, so illegal collections practices written violations. So not only do they have strict guidelines on what they can do on credit reports, also with phone calls, they also have rules and regulations on collection letters. So if you see on this letter here, and I know it's kind of far away, but you have Leading Edge Recovery, and then you have LVNV Funding. These are all collection companies. And then you have Citibank. So who on earth do you pay? If you have a debt, who are you supposed to pay? So the law states that the least sophisticated consumer has to be able to look at the letter and easily know who to pay. This particular letter, you wouldn't know. There's several different companies on there, and it's not clear. So the least sophisticated consumer has to look at it and easily know who they owe. This one right here, you have Apex Financial, you have Equitable Financial, Chase Bank, and WAMU. All right, so you have 4 different companies. Now this one right here, if you could actually see it in person, and this was actually one of our clients, it came in an envelope, and that looks exactly like a check. So if you do what I do, you go by your trash can, you're like junk mail, check. But if I saw a check, I would definitely open that up. All right, and that's what she did. She took it to the bank because she thought she had a check for $51.48. She actually had a collection for $51.48. She was awarded $500 for this because it's deceiving. It's making that consumer think that they have a check in the mail, so they're going to open it up. You can't do that. All right, so they have to stick within their guidelines. And again, when there's written violations and there's phone call violations, then we are able to sue because we are a law firm. And again, this is just showing that they're approved. So a lot of times when people find out that I'm a law firm, they're like, oh my gosh, this has got to be so expensive. Well, we are very reasonably priced. All of our business cards on the back of them have our pricing there. We only charge for what we're able to remove from a credit report. So if we're just giving you advice or helping you out, giving you some avenues to initiate credit, get new trade lines, that's just, we're nice people, that's what we're doing. If we're removing things from a credit report, we only charge for what we're able to remove. So if it's a collection or repossession, that's only $65 per bureau per collection. And then we have late pays 30. Now that's the hardest thing we have to remove because most of the time they can verify and validate. All right, and that's what we're looking for. They have to verify and validate. So most of the time when you see lates on the credit bureau, it is correct. And then we have charge-offs, $65, and again, this is per bureau. Bankruptcies, $120. Foreclosures, $120. Repossessions, like I had mentioned earlier, $65. Incorrect personal info, like how my dad and brother get their stuff mixed up, $15. Judgment, $65. All right, so if I go after 25 collections and I only remove 15, I'm only going to charge for the 15 I removed, not the 25 I went after. All right, so there's absolutely no risk. Normally, about the average price of credit repair for a company ends up being about $755 when it's all said and done. Not bad, less than what most people pay for rent or a house payment. And it makes a huge difference on your interest rates. It's amazing when you look through how much your payments will change or adjust because of interest rates. It's pretty alarming. So our Fees are very reasonable. What happens is we set you up with a credit analyst. Brian's a credit analyst. He works with clients. And so he would go through your credit report. He would take a look at it and say, okay, Mr. Consumer, it looks like here you have 12 collections we need to try to remove that showed up on all 3 bureaus. And so your total with me, we'll say $755. Any contract with us that would be more than $500, if we get everything removed, we take a retainer fee 1 week after you sign the contract. The retainer fee is usually about $200 to $300. That goes towards your total bill, so it's like a deposit. So then in that first 40 days, because each of our rounds are 40 days, we call you up and we say, hey, great news, we were able to remove 10 of those items, so you've already paid $200 retainer fee, now your bill with us is just $100, and then you just pay as you go. Does that make sense? Does anybody have any questions? Okay, go ahead.
But the initial and why I love you guys is if you don't do anything, you don't charge.
Not at all.
Because that's been the most beneficial, because we can send people to you that have questions, and there's, like you said, there's no harm to it. You can go through and
Right.
tell them what they need to, and if they don't need to, you just send them back to the lender. So.
Exactly. And we also, our credit analysts are really good about capping the contract. So if I have somebody that's like, let's say, if I get everything cleaned up, they've had a really rough couple years, it's going to be about $1,500. Our credit analysts are able to discount that down and work with you on payment and even the total amount. So once you cap that amount, we don't stop working. We continue to work, but you're just getting that work done for free. Also, any first responders, so like military, firefighters, police officers, anything like that, we give a 40% discount right off the top. All right, so we try very hard to be involved in our community and give back to the people that give to everybody else. So, and then we are also part of Homes for Heroes, and that gives discounts for teachers and again, first responders, military, things like that. So we're very heavily involved in the community. This right here is a fantastic website to go to. This is called freecredithub.com. You can get your credit report for only $1 for the first 7 days, and then after that it is $19.99 a month if you want to continue it and monitor your credit. Now this is one of the credit reports that I was telling you about that's not your actual FICO scores, but it's going to give you an idea of where you're at, and it's going to let you know what's positive and negative on your report. All right. The other things it does is it's ID theft protection, monthly credit monitoring if you choose to continue with it, student loan consolidation and rehabilitation. That's a really good information. And then it also have links where you can apply for a credit card, and then get your rent history reported. So we have a company that we work with them to do that too. So this is a really good resource. Keep it in case you want to check out your credit and see how that's going. So that's pretty much what I have. If you guys have any questions at all, or you think of something later, Brian's a really good person to reach out to. You can also feel free to reach out to me. I'm the county executive, so I go around and do presentations, do a lot of visits, things like that. I don't actually work with clients, so I want to be very clear on that.
We do have, we have the blog about the calls
Yeah.
out there, and it has those on there in the blog,
Mm-hmm.
the calls.
Yeah, and actually they can find that on our Facebook page, can't they?
Uh-huh.
So if you guys want to, if you guys love Facebook, go ahead and go on Facebook and look at Credit Loss Center. You can find our page, and we have some really good information on there and blogs and just different.
And there's one about the voicemails, and then, what's the other one? Oh, the medical debt.
Oh yeah, medical debt. Yeah, that's a really good one.
And I have a question about that. So, is it my understanding that medical debt does not count against trying to get a home loan? Is that
Yeah, so this is what happens when you have several medical collections on your credit report and they're showing up as collections. That's going to damage your scores. So you can normally, when someone's like, oh no, it's fine, I don't have to worry about the medical debt, I can go ahead and get a home loan. What's happening though is your scores are so low because of those collections, so it's still calculating in your score. So if you have several medical collections, your score is going to be lower, so then you're going to have higher interest rates and so on and so forth. So to answer your question, yes, you can go ahead and get that loan, but your scores are going to be so damaged, you're going to be paying quite a bit more for your interest rates. So that's where it's difficult.
I have a question about the third-party calls.
Uh-huh.
How often do they need to be bothering you to?
So what would happen if you're getting phone calls for someone else, like that gentleman who
Yeah.
his dad? When they called, he's like, no, I don't know where my dad is. I don't have the information. Stop calling me. Well, then when they called him again, it was happening over and over. I had him starting to write a log, like, okay, this time they called about this, they left a voicemail or whatever. So if you tell them not to call, do not call me anymore, and then if they continue to call, you need to start writing it down. The
Okay.
date, the the time, and then if they left a voicemail, and if they did, keep the voicemail if you can, or if you answer the phone call or whatever.
There is a copy of the log on our actual credit law
Website.
center website.
Did you hear her?
Yeah.
Okay. Yeah, so you can go on our actual website, you can find that on there as well. So, did anybody else have any questions?
I just had one that came up with a client today. So if they went to one lender and they weren't necessarily, that wasn't the lender they wanted to go to, and then they go to an additional lender, the one they're going to go to with, is that inquiry going to hurt them, or how is it?
I'm so glad you asked that question. All right, so consumers have what's called the right to shop. All right, so they have on Experian and Equifax, you have 30 days. You have the right to shop. So they're coding it the same way. They're going in for a home loan, and let's say, oh, we don't like Billy Bob over at ABC Loan Company. We're going to go with Jane Doe over at XYZ. As long as it's went in that 30 days. Now, TransUnion's different. It's only 15 days. All right? So you want to make sure you're doing that. Also, I'm glad you said that because it sparked a memory. You want to make sure you don't get your credit pulled more than 10 times in a 12-month period. So don't get your credit pulled more than 10 times in a 12-month period. If you do, it can actually damage your scores. Now, what happens with car dealerships, I can tell when someone's been looking for a car because it's like just flooded with inquiries. The reason why that's happening is because when they're going in for the loan, they're coding it differently. So like with a home loan, it's pretty cut and dry. It's one code they put in there so they know that that's what it's for. With vehicles, they'll code it in. There's like 4 or 5 different codes they can put in, so it's showing up new, different inquiries. So that's a good question. Thank you for asking
So
that.
just to clarify that, if you go to this one lender, they run your credit, you don't like what they have, so you go somewhere else, they run your credit, it's only
Ding one time, 15. Just keep in your mind 15 days is just easier. The other two do give you 30, but you're still getting dinged. So, yeah. And if you're not going crazy, be careful around Christmas time when every time you go up to buy something, they're like, do you want to save 10% on your purchase? If you don't do it,
No.
it's not worth it. Yeah. So if you have your credit established, don't worry about it. So, and then you want to make sure that you get a major credit card. It's not just like little Victoria's Secrets or JCPenney's or I'm not against that. I'm just saying make sure that you get bigger credit cards than that. You can have that on the side, just for whatever. Just don't take it with you when you go shopping. So does anybody else have any questions? Anybody?
Just for clarification, so if I contacted Brian and went in and met with him, is he able to review my credit? And is there a fee in that? Or
No,
is it
absolutely
just-
not. The only thing we charge for is actually removing a negative item from your credit report.
Okay.
And you will have an idea. We're going to go through, Brian, we go through your credit report and say, okay, it looks like you have, 10 collections that we need to take care of. So if I get everything off and I'm a complete rock star, your total with me will be this amount.
Yeah.
So it will not be more than that, but it could be less than that because remember, we only charge for what we're able to remove.
Right.
So, and he would have you go on freecredithub.com and pull a consumer report so we can see what's positive and negative on your credit report.
Okay.
If you need to establish credit, he'll let you know, like, okay, you need 1 installment line or you need 2 credit cards or what have you. And then while you're doing that, then we're going to go in and we're going to be removing all those negative items. All right? Now, if we get to a point where we have negative items like collections on a credit report and they've been able to verify, they've been able to validate, then we can do what's called a pay to delete. And so what that is let's say you have a bill like Sprint for $300. Then my paralegals can get a hold of them and say, okay, I tell you what, they've been able to verify, they've been able to validate, so this is correct. So let's work something out here. We have $250 of this debt. If you promise to remove it, and we get it in writing, remove it from the credit report, then we'll go ahead and pass over the money. We can do that as well. So we can negotiate.
So they have to
For
agree
you.
to remove it.
Right.
And
Yeah,
so
that's the
what's
whole
the
thing.
fee?
Once you pass that money over, the ball's not in your court anymore. So we use that money as negotiation power to get it removed from the credit report because you remember what happens. If they just update it,
Right.
you're going to tank your scores.
Right, and so what's the typical, or like the starting cost?
How long
of
it
that?
Well, it depends on how much the debt is. So what we're going to do is we're going to collect 70% of what the debt is. So let's say it's, $100, and we're going to take $70 from you. So that way we're negotiating back and forth with the company. We have that money. Back in the day when we first started out as a company, we tried to do pay to deletes, and so we would try to negotiate it down, and then we call the person and be like, hey, guess what? We're going to work this out. They said that they would settle for a little bit less and remove it. We need $70. They're like, oh, I have $70. So now we make sure we have the money in hand, and then we go ahead and start negotiating for you.
Yeah.
Right, and
So, and that's going to be per item, like depending on how much it is
right,
and who it is, That's gonna
that
be
determines the cost.
right.
So would I be paying just the 100, or would I be paying like 170?
You would be paying we charged, how is it? We do 20% of what we saved you, I believe it is. And then, I think 20% of what we saved them, right? You know what? Let me double check for sure and tell you how to do it, because it's a really, really good deal. I know that.
Okay.
But I think it's like how much you save from, like if it's like $300 and we get it down to 100,
Right.
we're just gonna take a percentage of how much you saved. Does that make sense?
So 20% of that initial
What you
3,
saved? Yes.
okay. Or the 2,
Yes.
Of
And
the two,
well,
The
yes.
two. Of the two.
or the 2.
Yeah.
But they're saving you that much money, so it's like
Right.
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 Exactly.
Okay.
So, but I'll double check on that.
Sometimes it's a lot less than 70%.
Yeah. A lot of times it's a lot less than 70%. We just do that to make sure we have the funds in there. Because we
Right.
look really silly when we're negotiating and getting
And
a little
then
squabble, and then
there's
it's
no
like, oh, my bad, sorry.
Right.
Yeah. So we just make sure it does. That's that. Does anybody else have any questions? Nothing. All right. Make sure you know that, like I said, that front and back, that do's and don'ts of home buying really is good information. And it is amazing how you can get really excited about purchasing a home and lose your mind for a second. So we all do it. And then, like, I have these, and we have Ryan's cards. If you guys need anything, reach out to us. We'd love to help you out.
Thank you, Janna.
Okay?
Thank you.